Welcome back to the channel, everyone. Today I want to talk about how the shorts are finally being squeezed. Just this month alone, in July, shorts lost an eye-watering $2.5 billion. In this video, I want to explain how they lost so much money, why they're closing these short positions for a loss, and what that means for their future. So stay tuned and let's make some money. So let's dive straight in with the key information. But before I do, I want to quickly tell you about the new YouTube channel I've just started, talking about other stocks, the wider market as a whole, long-term investing and short-term trading. If you're only interested in AMC, then stay right here, don't go anywhere, as I'll still be making videos on this channel. But if you are investing in other stocks, then be sure to check it out. I'll leave the link to the channel in the description below, as well as the link to my newest video. If you're like me and you've got a lot of money tied up in AMC waiting for the squeeze, but you still invest in other stocks for the long term and the short term in the meantime, then be sure to check it out. I've got tons of gems on there for long-term stocks that I've been buying since April that are already up 60, 70, 80, 90%, some up even more. But as I said, let's dive straight in with the key information. As Reese's Politics tweeted, he said short sellers have lost an eye-watering $2.5 billion on heavily shorted stocks in July alone. And he said new data also shows that stocks with high short interest are now outpacing the S&P 500 returns by historic margins. Again, we can see from this chart that for July alone, heavily shorted stocks are up on average 16%, whereas the wider market is only up just shy of 5%. If you have been watching the market daily, you've probably seen some of these mini squeezes or mini sneezes on stocks like Opendoor, stocks like Donut, dnut, and also a few others like KSS. So I want to explain why these mini squeezes or mini sneezes are happening across the market and why, as a result, that shorts are losing so much money. We can see from this chart that there's signs of speculation stirring again. These heavily shorted stocks are actually back on the rise. This chart is a measure of heavily shorted stocks over time and also by momentum. I'm not exactly sure what this chart is measuring on this axis, but it shows us the momentum over time of these heavily shorted stocks. We can see here that back in 2021, heavily shorted stocks absolutely exploded. We can also see that right now in 2025, they are back on the rise once again, but still have a ways away to go before making new highs. That basically means shorts are losing money on these heavily shorted stocks, but only on some of the heavily shorted stocks right now. They're only closing some of their short positions, not all of them. But you have to remind yourself on exactly what I've told you over the last few years. When shorts are in trouble, when shorts need to close out of their short positions, they're going to do it in a very methodical order. They're first going to close their shorts on the biggest tech stocks. Those tech stocks, they know they aren't going to crater into oblivion. They're just trying to profit from a short-term short position. You can tell if that's happening because the big tech stocks, the AMDs, the Nvidias, the Metas, the Googles, the Microsofts, they all start running, which they absolutely have done already, especially in July of 2025. Next up, we have those short positions on the heavily shorted names, the small stocks they are trying to crush, but not the shorts that would crush them. We're talking about shorts on companies like Carvana, Coinbase, Opendoor, KSS, Krispy Kreme, Donuts, dnut, and other stocks as well. And we know, especially as of this month, those shorts are being closed too. And of course, finally, the last shorts to be closed, the biggest shorts of all, are the shorts that would absolutely destroy these hedge funds to close, and it would liquidate their portfolios. Also guys, if you haven't already, now is a great time to join the Millionaire Mindset Trading Group. I've actually expanded the group recently to focus not just on small cap trading, but also to focus on options trading and even long-term investing as well. I'm putting up on the screen now some screenshots of some of the stocks the group and I have been invested into for the long term since April of this year, so only in the last 3 months, and many of these stocks are up 60, 70, 80, 90%. I'll also put up some screenshots of some of our recent options plays and some of our small cap wins we've had as well. As I said, if you haven't already, now is a great time to join the group, and be sure to use discount code SUMMER in all capitals at checkout for a discount off your first month or for $100 off the price of the lifetime membership. Now on top of this, Bravo's research has tweeted about how the Buffett Indicator is now 2 standard deviations above its average, saying that this has only happened a few times in 1970, the year 2000 and in 2021. When this Buffett Indicator rises so highly, it basically means the market cap of companies and their price earnings ratio are way out of scale with the US GDP. Basically suggesting companies inside the S&P 500 are way overvalued compared to what they should be and will most likely come crashing down. And as Wiz pointed out, he said if this market cracks just like it did in the year 2000 and also in 2021, that GameStop and AMC might not just survive, but they might erupt. And in that event, those over-leveraged shorts will indeed get margin called, and they will indeed be forced to close out of all of their short positions. Not just shorts on the big tech stocks, not just shorts on the small, heavily over-shorted stocks, but also the shorts on the big ones, the AMCs, the GameStops, and everything else in the meme basket too. I especially wanted to show you this chart, which is an overlay of 2 separate charts. The blue, the year 2008, and the red right now, the year 2025. We can see right now in 2025, we're almost perfectly replicating the euphoria and the blow off top of 2007, just before it all came crashing down in 2008. When we get blow off tops and euphoria like this, just like we had in November and December of 2021, it only ends one way, and that's with the market falling, which could end up lining us up perfectly for an AMC and GameStop short squeeze. Now, I also wanted to talk about how the exposure for CEOs calling out manipulative short sellers is growing rapidly. As Stephanie has tweeted, she said more and more CEOs are taking action against market manipulation. Not just small cap companies, small cap stocks, but now we've got HPQ. She said this is a growing movement, and finally we're not alone in this battle. There was an explosive interview between Tucker Carlson and Trevor Milton, and now the HPQ CEO is calling out the corruption. The CEO of HPQ has said, in my letter, I formally requested that CIRO investigate these patterns of behaviour on HPQ shares, saying we've supplied detailed evidence, including screenshots, timestamps, and internal analysis, documenting exactly what we've observed. Saying we've also asked regulators to review broader trading activity, including the use of dark pools, potential naked short selling, and coordinated disinformation campaigns. Now, these disinformation campaigns is exactly what the Department of Justice is investigating a number of different hedge funds and researchers for committing. And of course, we've already got some of those CEOs, some of those hedge fund owners being charged with actual financial crimes. The HPQ CEO said this isn't just a request for one company. He said it's a call for accountability in our markets. I personally think this is exactly what we need. The more and more exposure we can get, not just in our community of AMC and GameStop investors, but of all company CEOs, all listed company CEOs, countrywide and worldwide, the more of a chance we have of something being done. If this goes on much longer, it'll end up getting to the point where American CEOs of American companies won't want to list on the American stock exchanges. Why would these companies want to pay millions of dollars in registration fees each and every year just to get shorted into bankruptcy? And that is ultimately why we need action to be taken from the SEC and effectively for the entire wider government. And finally, for today, we have a win for retail investors, and that's the Virtue Financial CEO, Doug Cifu, has officially retired and stepped down from the company. The article doesn't specifically give a reason as to why he's stepping back and stepping down, but it may have something to do with the fact that he was dismissed and suspended by the NHL over comments that he's made on social media. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video.